This podcast is brought to you by Daba, your most comprehensive platform for investing in African stocks, bonds, and managed funds. You can download the Daba app on your favorite Google and Apple app stores. Today, we look back at a week marked by solid performances, important movements across several key stocks, and fresh information from corporate third-quarter results. We'll break everything down clearly so that investors at every level can follow, understand, and make sense of what happened on the West African markets. And as always, we begin with the good news. The BRVM ended the week in positive territory. The BRVM Composite Index increased by 0.1% to close at 336.98 points. Meanwhile, the BRVM 30 Index recorded a slight decline of 0.71% and settled at 162.91 points. This contrast, one index rising while the other dips, signals something important for investors. It shows a market that is progressing overall, but one where gains are being driven by a smaller group of standout performers. This is typical of a period of sector rotation, where certain companies attract renewed investor interest, while others pause or consolidate after months of strong performance. Let's begin with the strongest gainers of the week. The numbers were impressive. Unilever, Côte d'Ivoire, led the entire market with a remarkable surge of 33.97%, closing at 30,840 francs CFA. BICICI followed with an increase of 33.51% to finish at 2,550 francs CFA. Safka rose by 27.75% and closed at 2,900 francs CFA. Seto advanced by 23.08% to close at 1,200 francs CFA. Nestlé Côte d'Ivoire completed the top performers with a rise of 17.07% to close at 12,000 francs CFA. These strong weekly gains offer two key insights for investors. First, the leadership came from companies in consumer goods and agro-industry. This sector-driven momentum suggests that investors are gravitating toward businesses with stable demand and the ability to maintain margins despite inflationary pressures. Second, although prices climbed sharply, trading volumes remained moderate, meaning the buying was targeted rather than speculative. For long-term investors, this is a sign that the climbs were driven by fundamentals, earnings expectations, pricing power, and confidence in company strategies, rather than short-lived market hype. Now let's look at the biggest weekly declines. CIE retreated by 3.82% to close at 2,515 francs CFA. Unoax dropped by 7.35% to end at 1,450 francs CFA. Ecobank Group declined by 8.33%, closing at 22 francs CFA despite very high trading volume. Sycor fell by 12.36% to finish at 3,155 francs CFA. And the steepest decline was recorded by Bolloré Transport and Logistics Côte d'Ivoire, which fell by 12.65% to 1,350 francs CFA. Such weekly drops should not automatically be interpreted as negative long-term signals. Decreases in the range of 5% to 15% often reflect technical corrections, profit-taking after strong rallies, or short-term repositioning by traders. For patient investors, these moments can be opportunities, especially when a company's fundamentals remain solid. Let's now turn to the major corporate developments of the week. Third-quarter financial results across the region. These numbers matter because they shape expectations for the fourth quarter and for early 2026, influencing how investors position their portfolios. Sonatel, the telecom giant and Orange subsidiary operating across West Africa, reported net profit of 3 billion francs CFA for Q3 2025, an increase of 8% year-on-year. This growth was driven by high-margin segments such as data, mobile money, and fixed broadband. Even with new taxes on mobile money and higher customs duties on devices, Sonatel increased investments by 2.6% to 203 billion francs CFA, reinforcing its leadership in digital infrastructure. For investors, these results highlight the company's resilience and the strength of its diversification strategy. Société Générale Côte d'Ivoire also delivered solid performance. The bank reported Q3 net profit of 83.3 billion francs CFA, representing a 12% increase year-on-year. This came from strong cost control, improved efficiency, and growing deposits, which expanded by 13.9% to reach 2.94 trillion francs CFA. With a IOTA A credit rating from Bloomfield and leading market share in both loans and deposits, the bank continues to signal stability and disciplined management. BICICI posted one of the most impressive performances of the quarter. Net profit surged by 50.8% to 27.4 billion francs CFA. This leap reflects strong revenue growth and a disciplined, risk-aware lending approach. Deposits rose significantly, while loans slightly contracted as the bank adopted a more selective lending policy. For investors looking at the long-term maturation of the Ivorian financial sector, BICICI's transformation under local ownership is a development worth watching. Ecobank Côte d'Ivoire, another major player, recorded Q3 net profit of 44.4 billion francs CFA, up 15.4% year-on-year. The key driver was an 18.5% expansion in net interest income and a dramatic reduction in credit risk costs, which dropped by more than half. Deposits grew by 33.2% to reach 1.65 trillion francs CFA, boosting the bank's capacity to finance corporate clients and retail expansion. A return on equity of 29.7% reflects strong operational efficiency. And finally, Nestlé Côte d'Ivoire reported Q3 net profit of 11.9 billion francs CFA, representing a decline of 21.3%. The drop was due mainly to higher input costs, especially milk and cereals, and elevated logistics expenses. Although revenue edged up slightly, margins were squeezed. For investors, this illustrates the continued pressure on FMCG companies operating in inflationary environments, where imported raw materials dominate production costs. Now, let's shift to the bond market. Bond trading remained active across the region, particularly on 10-year and 8-year maturities. Investors continued to seek stable yields in an environment where inflation remains present, but monetary policy across the WAEMU is still cautious and measured. Activity levels reflect the continued participation of institutional investors, while more retail investors are gradually entering fixed-income markets through accessible platforms like Daba. Before closing, let's look at the opportunities for the coming week. Based on current market patterns, several sectors appear to show renewed investor interest. These include companies with consistent earnings, strong liquidity generation, and those benefiting from domestic economic momentum. Demand also remains firm for businesses offering strong potential for dividend distribution or those displaying disciplined cost management. However, as always, the most detailed insights, including target prices, risk levels, and timing strategies, are reserved for Daba Pro subscribers, where our analysts provide deeper research and actionable recommendations. For all listeners, the key takeaway is that the BRVM continues to offer a combination of stability, strong fundamentals, and opportunities driven by corporate earnings performance across banking, telecom, and consumer goods. If you want to go further, access weekly recommendations, benefit from premium analysis, and reduce your investment costs, subscribe to Daba Pro. With Daba Pro, you don't just follow the markets, you stay ahead of them. That's all for today's episode. Thanks for listening to the Daba Markets Talk podcast. We'll be back next week with another update. If you enjoyed this episode, please leave a rating, follow us, and share with friends. Remember, this information is for educational purposes. Always do your own research or consult with a financial advisor before making investment decisions. And download the Daba app on your app store to start investing in African stocks, bonds, and manage portfolios through your phone and find other helpful content. Until next time, keep learning and keep growing your financial knowledge.